All right, so chapter 9 is going to be petty cash, or just cash in general, okay? But specifically, this is definitely for petty cash. Now, again, when we talk about cash, what is cash? Or in this case, cash, check, credit card, and EFTs. Now, of course, what is cash? Cash is definitely used as some kind of form of currency that we use in exchange for the goods and services that we provide, right? That businesses provide. So by providing cash, right, that kind of fuels the idea of buying products as well as purchasing services. So again, in the United States, we use the US dollar, right? Again, the US dollar is our form of currency that is widely used. I know that there is cryptocurrency that is currently being used as well in place of a dollar. And I know that the US dollar is one of the stronger type of forms of currency that could be widely used over international and overseas, right? A lot of foreign people would prefer to be paid in the US dollar. Okay. But again, that's what we use to exchange for goods and services. There are other ways that you can convert your currency into other currencies. But again, in the United States, when we deal with cash and cash only, we are looking at the US dollar. Okay. Now, of course, another form of currency or some way that we can use money is by simply writing a check. So as you can see, here's a standard look of what a check should look like, right? It should have these 5 components, right? These 5 components is what makes a check valid. Number 1 needs to be the name of the person that you're paying, right? If you don't have a name of the person you're paying, this check is invalid. Why? Because who is this check going out to, right? If it's not filled, then there's no point, right? The date is also very important because this allows you to give a time frame on when a person is able to cash out this check. So dates, again, you can select your dates of when the check is available to cash out. And from that date, I believe checks can hold up to 6 months, not value, but hold up to 6 months before the check expires. Okay. And of course, another important thing is to have the amount. You need to be able to pay somebody with an amount. If there's no amount, then what's the exchange here, right? And then, of course, the account information. So the account number, usually it's at the very bottom, which includes the routing number, your information's at the top of the check normally. But you have an account number, right? That's definitely very important because they need to know exactly where you are taking this money out from. And usually the account number is a checking account, a bank account number, a savings account number. It's some kind of account number that's linked to some kind of treasury agency, right? Something that's holding your money, right? And if it's your business, it's going to be your business bank account. And last but not least, you need to validate that this check is written out to this person for this amount by signing that you validate and verify that this transaction has occurred. All right, that you approve this amount and you approve that you're taking this money out from your bank account. Okay, so again, checks nowadays, again, not as widely used, but again, it is a good type of paper trail for businesses, right? Because it gives you a good track record, right? Because you have a check number that will keep you in track of where your money is going, right? And so on and so forth. Then it will also keep track of who you paid and what you paid, right? Again, a credit card also does the same thing as well. We'll talk about that in a second. But in this case, right, checks is usually normally used as some form of paper trail and proof that a transaction has occurred and existed, right? Then we're going to talk about credit cards. Again, credit cards is going to be widely used because, again, with today's society and how things are a lot more easier electronically, right? A lot of times, a lot of people, right, it's just more convenient to use a business credit card or even a personal credit card and just swipe those charges and call it a day. Instead of having a pocket full of cash and you have to have the exact amount of cash, or having to carry a checkbook all wherever you go, you know, a piece of plastic card is like the best thing that you could do in regards to getting a service or a good. Now, again, most companies right now currently own some kind of credit card accepting type of payment. So those ones that widely usually accept Visa or MasterCard. Okay. Once again, you can use a credit card in exchange for goods and services. It is a form of currency in regards to this. Now, here's a few things when you're looking at if you do end up using a credit card or you accept it as a form of payment. Now, of course, credit cards, right? When we use it as a consumer, right? We no longer owe anybody except for the credit card company. And of course, with the credit card company, they give you in details of what to expect when you use their credit cards, right? They will charge you interest. They will have annual fees. Maybe you need to pay a certain amount of money just to get that specific card that you want, right? So there's a lot of factors when you're using a credit card, right? But as the other perspective, if you're the person who's accepting credit cards as a payment, you have to understand that you have to negotiate with these credit card companies, because what they are essentially doing is they are paying you in advance for a customer to pay for a service or an item, right? So therefore, they're going to always want to have some kind of either a flat rate fee of a additional charge, or two, they will require maybe a small percentage of your actual sales. So in this case, because you are using them to get the money to you as soon as possible, right? If someone owes you $1,000 and they charge their card $1,000, that's $1,000 that goes into your pocket. But because Visa had to get that money for you, or in this case, pay for them, they're going to want to charge you because you asked them to collect the money for you in the first place. So therefore, they're going to charge you some kind of either percentage of sales or so on and so forth. So a lot of times when you do go for these credit card companies, if you ever talk to someone who's an independent contractor or independent worker, they usually prefer cash, check, or an electronic funds transfer, because these credit card companies are going to charge them and they don't get the money 100%. They only get maybe 98 or 95% of the sales. So because you have to pay for these major credit card companies to collect the money for you. Okay? So credit cards, yes, it's good, but it's also bad at the same time, depending if you're a large company or a small company, and how easily accessible you want to have it available for consumers. Because again, if you don't accept credit cards, right, a lot of customers might turn away and be like, well, I'm sorry, I can't pay you. There's no other way. All right? Excuse me. Now, the next one that we're going to talk about is called electronic funds transfer. This is probably nowadays the most widely used type of application that allows you to send money across different bank accounts. So once again, Zelle, right, allows you to transfer money from one person to another through electronically, digitally, right? You just send them a request or you send them the money, approve of it, and boom, it goes instantly to their bank account. So again, this is a widely, definitely used nowadays with the 2021, right? No one carries a wallet anymore, right? All your wallets are carried into your phone, right? With if you guys have Apple iPhones, that's what you can do. You can carry all your credit card information in your hands wherever you go, right? You don't need to have a wallet per se to have all your transactions available. You could just scan your code or whatever it's called, and it will take the money and deduct it right from your bank account immediately, right? Apple Pay. I don't know what the other one's called, but Apple Pay is also another one, right? Where you get to link your credit card to your phone, and you just tap it onto the screen, and it would accept it through the credit card company, right? That's another system there too. All right. So again, a lot of these electronic fund transfers is just another easier way to go ahead and transfer money from one place to another. Okay. Okay, things like Square, things like all of those extra things, okay? But the main majority of this here is understanding what petty cash is. So what is a petty cash? Well, we talked about the forms of payments, right? We talked about cash, check, credit card, and electronic funds transfer, okay? Now, those are all 4 different ways that you can pay for a transaction to happen, right? There are many ways that you can use to pay for expenses. But what a petty cash fund does is this for a specific small expenses that occur around the business. You definitely don't want to have again, if you have to go run real quick to the store, and again, if you don't have cash on you, you don't have a credit card on you, you don't have your phone on you, whatever, for whatever reason, right, it's a minor expense, and you don't have those available to you, then, and again, it's a company's, you're buying supplies for the companies, right, then having a small petty cash drawer to make those small business minor expenses is going to be something that you want to consider, okay? Especially when you are running a company. Oftentimes, for example, the school, right? There's countless times where the office has to go run out and buy a ream of paper because they're printing documents left and right. They're printing exams, results, things, material for the classes. They're constantly printing. And our school, we buy paper in bulk. We buy it by the cases, right? You know, those large boxes of printer paper, right? That comes in reams of thousands and thousands, right? Now, that's going to cost us a lot of money at the long end when we have to buy that in order and buy that in bulk. And on top of that, it takes anywhere from a week to place the order and actually get that shipped to the store. Now, in this case, when the office runs out on printer paper and they need just a ream of paper to just get through the day or to just get through the week while the paper is getting ordered, then yes, that's where a small business or small minor expenses is going to come into play, where someone's going to leave the office, go run down the store real quick to the local Staples or Office Max, pick up a couple reams of paper, and then bring it back to the office and say, hey, I have just enough paper to last us the rest of the day. So things like that happens on a regular day-to-day basis, right? Maybe you run out of cups for your company, right? Or maybe you run out of ketchup to serve your food. You're gonna have those minor business expenses, and unfortunately, yes, you cannot wait till a shipment comes in. You need that stuff now. So when that comes into play, then that's where a petty cash drawer is going to come into play, where you're going to set aside a box full of money. And what that does is that money is meant to make those small little errands, to pay for those small business minor expenses. Okay. Another form of this you can do too is reimbursements. Again, that's also kind of in the criteria of petty cash drawer, where if someone owes you money, or if the company owes you money because you made a business expense and you bought something for the company, then yes, you need to go and either go to the petty cash drawer or go to the boss and get a reimbursement. Okay. So again, here are the key factors of having a petty cash drawer is number one, you need to create a ledger account for the petty cash drawer. Okay. Second thing you need to do is you need to have an actual physical lock box. You need a box that locks up, because once again, if you have this box laying around in the office randomly on a table and it's not locked, you already know what's going to happen. Someone's going to come in and steal it. Okay? And that's why you need to have a lockbox so then the money is secure. Now, second thing too is that you definitely want to make sure you have it in a safe place to put it. And also you want to make sure that that you have someone that's in charge of the petty cash drawer. Okay? Because someone has to be there to manage the petty cash drawer, to be the one to record that you're taking out money, and so on and so forth. Because if you can let everybody be able to access to that, people will steal, people will take stuff and not record it, etc., etc. Okay? So a great example of a petty cash drawer would be a cash register. Okay? All right, so let's talk about establishing a petty cash fund. Well, when we talk about establishing, this is going to be, of course, in discussion with your bill manager or someone who's in charge of expenses, to just ensure that the amount of extra money that you may need for those minor expenses, you guys are going to establish how much you should have. Now, again, it's also going to be with the owner as well, depending on if they're the owner of the company, that you want to be able to set up a cash box for those minor expenses. Okay. So with that, then it goes through that, and then of course you're gonna assign somebody to have that, and then you're going to journalize the transaction, and then once again create the ledger account. Now, to establish a petty cash fund is straightforward, right? You're going to debit your petty cash and you're going to credit the checking account. Why? Because rule of thumb here is you're essentially taking money from the bank and you're converting to cash, and you're dumping that money into a lockbox called petty cash. So that's essentially the same thing here, right? It's not a chump change that you take randomly and decided to put in a box. It's not a savings, all right? It's not money that you donate to a box, okay? It's something that you're legitimately going to utilize as extra means to make extra purchases for those reasons, okay? So in order to establish it, once you figure out what the number is, you're going to debit your petty cash fund and you're going to credit your checking account. Okay. Then let's talk about how to, what happens when we create that ledger account, right? So our scenario here is that we took the cash and we're going to debit into our petty cash fund. So this is what the petty cash fund ledger should look like, right? First thing that you have is to establish it. It's going to be at $500. Okay. Now, as we go through the month and or whatever, when you start your business, of course, and you run the operation. So what happens and how do you spend the money that's in the petty cash fund? Straightforward, right? it's only for minor business expenses. So if you have to go do a coffee run, or you need to go pick up some extra supplies or something like that, or if you need to pay for postage. So oftentimes when you have a shipment of stuff, they might ask you to pay cash on delivery. So you could use that. You might need to ship things out, so you have to go buy some postage stamps. So for whatever reason that you will need to use it, this is how you use it. You're going to go and have someone record that you're going to be taking money out. And what's going to happen is that once you get that amount of cash, right, you are obligated to return to the petty cash fund with the receipt and the extra change that comes with, or the exact change that comes with the receipt, right? And so at the end of the day, as you keep spending and spending and spending, your lockbox will start to, the money starts to disappear, but it becomes full with receipts, okay? Now, of course, with those receipts and, of course, your chump change, right, then that's what you're supposed to do with the petty cash fund. And once it gets low, then we have to talk about filling that petty cash drawer once again. Okay, so at the end of the day, no matter what you are doing, okay, your lockbox will either have 3 options, right? It will be full of receipts and no cash, or no receipts and cash, or a combination of both receipts and cash, and they all have to equal the total amount that you established the petty cash fund for. So that means the total amount of receipts that you calculate, right, all the totals, should match the total amount that you originally established the petty cash fund for, okay? So if you have a combination of both receipts and cash, you're going to count the cash and you're going to count the receipts and add those two up together to get you a total amount of what you established the petty cash fund for, okay? Now, here is a note that you have to remember. When you are taking money out from the petty cash drawer, you are not to directly journalize the amount out from the petty cash drawer, because at the end of the day, you're going to put that money back in there by taking all those receipts, counting them up, and basically converting them back into cash. You can dump more cash in there. So therefore, if you decrease the petty cash fund, or in this case, you subtract money from the petty cash fund, then you're essentially saying that the petty cash fund is lower and gets lower and lower and lower and lower every single time you buy something. And that's not what this is for, right? You are not to take money out from the petty cash fund directly, and by doing so, by directly writing it off in the journal, okay? So here's an example of the petty cash register / ledger. So this is someone who kept track of the minor expenses here. So let's say this, for example, you began the petty cash drawer with $500. Then we had Sam come in and buy meeting supplies and they borrowed $25 to give back exactly $23.85 receipt, with an exact change of $1.15. So therefore, if you want to, you can do the accounting on the side to make sure, well, how much money do you actually have left over in the petty cash drawer? So again, this list goes on and on depending on how many people use the petty cash drawer. Okay, you can use it for the boss, at least can uses it for minor expenses, such as a small, I just need $100, right? They could just take money away from the petty cash drawer because that is their money. So it doesn't matter what way you're looking at it. It's the company, the owner owns the company, so the owner can do whatever they'd like, right? And then till the very end, you're going to have a total of $443.18 of receipts, a remaining balance of $56.82 in cash. Okay, so right there already, my petty cash drawer has went from $500 down to $56. So that means a lot of money was spent using the petty cash drawer. Okay. Now, how do we replenish it? Well, straightforward. Since when you purchase the items in the first place with the petty cash drawer, right? Your assumption is that you're not going to record that transaction, because what you're going to do is you're going to place that receipt into the lockbox. All right. So that means whenever you are ready to replenish the petty cash drawer, that's where you're going to be recognizing your expenses. So in shorter details, or more easier details to understand this, is what you're going to do is you're going to calculate the total amount of receipts, and that's going to be equal to the amount of cash you're going to be giving back. Okay? Because every cash that you haven't taken out should be the cash that should be left over in the bank account. So pretty straightforward, right? So every time someone takes money out from the petty cash drawer, it is written in the petty cash ledger. However, the expense does not get recognized until you actually take those receipts and you convert them into cash by counting them all up and then writing a simple check to replace all of those receipts with cash. Okay?
How often you replace the money on the petty cash?
It depends on how low your petty cash drawer gets. Now, that's what we're going to talk about. So if your petty cash drawer keeps falling below the amount that you originally placed in it, then that's where you can establish where you can make an executive decision to go ahead and increase the petty cash drawer. Okay, now how often? It depends on how low or how many times that cash box has been used. So again, a lot of times it really depends on the company, right? Like, how often do you run out of printer paper? How often do you need this in order to operate your business, right? How often do you use the petty cash drawer is going to be determining, one, how much money you need to put in there, and if it's not enough, then you would have to increase it, the petty cash drawer. Now again, to answer, go ahead.
You have to track the petty cash often, or once
Yes.
a month, or
In this case, right, we have someone who is in charge, right? So someone here is keeping a track record, right? Right now, this money was enough for the end of the month, but that might not be for the month-to-month cases, right? So once your account in your petty cash gets too low, that's where the person who's in charge of the petty cash manager needs to report that to either the boss, or report that to the billing person that is responsible for the petty cash drawer, right? For all those expenses, right? So there is no actual time frame in regards to a petty cash drawer, because it just depends how often you use it. How often do you have these minor business expenses? And if it's frequent, then you definitely want to make sure you put in a high enough number so you don't have to replenish it as often as you'd like. Okay, I hope that answers your question. Okay, because you said, how often do we need to keep track of it? Well, you're going to be having someone that's in charge of it, so whenever that person uses it, they tell you right away. Okay, and then you mark it from there, and you keep a good tally, so you keep a good record of how much cash you have left. If it's too low, maybe you're in the middle of the month, you tell your boss and say, we need more money in the petty cash drawer. Okay.
okay, thank you.
All right. So, so for any reasons that you do run into the instance where you are running out of money quite quickly and quite frequently, that's where you're going to have to establish, well, should I increase the money so then we can have a little more room and a little more flexibility? Then you can go ahead and establish that. So in this case, in order to establish or to increase your petty cash drawer, you're simply going to debit your petty cash, and then you're going to add more money to it. Okay, so that's essentially how you replenish a petty cash drawer. I'm sorry, This is how you increase the petty cash drawer by saying, well, last month I only had $56 left. So I'm going to increase it again and dump more money in there, saying that now it's going to be worth $750, right? Because originally you had 500, then you increase it by another 250 to give you a total of 750. So now your petty cash drawer, you don't need to rely on it that much unless you absolutely need the money for any reason. Okay? And of course, when we need to replenish it, we just recognize all the receipts in the box, we count them up, and we're going to recategorize each expense based on what account they should belong to. Okay? And then we're going to, once we recognize that, then we journalize each expense, and then we credit our checking account, because we're going to reimburse for all of those expenses and put them into the register. Okay? So then once it comes into a time where you won't actually need the preferences anymore, right? Maybe you don't need the petty cash drawer anymore, right? And once you get to that executive decision, right? Maybe your company decides to get a business card instead. So then instead of having those minor cash expenditures, you can just lend the credit card out, and someone can go in, get the stuff that they need, and come back out and return the card, which can be done. Yes, you can do that. Okay. So oftentimes when you have a business credit card, right, and someone needs to pay for something, they usually request the owner or whoever's in charge of the petty cash drawer to borrow that credit card, right? And they still need to do the same procedures. They still need to come back with the exact receipt stating that amount. All right. Now, for any reason that they don't need that, again, we're going to consider using a closing entry, which closes out the entire petty cash drawer, right? So what are you going to do with all that money? Simple. You're going to place all that money into your checking account. So straightforward, right? You're going to empty out your petty cash drawer and you're going to dump it into your checking account. Because definitely this is not money that you could just pocket in your pocket whenever you'd like. Of course, if it's the business owner, he can do whatever he likes. If he says, no, I'm not going to take the money to the bank, I'm just going to take it home and pocket it, then that's, again, he's the owner. He could do whatever what he wants with the money, okay? But this is how you close out the petty cash drawer, is that you're going to dump everything out from the petty cash drawer and you're going to debit your checking account, okay? And that's exactly what you're going to do in your ledger too, to represent that, hey, I started out with my petty cash drawer at $500. I increased by $250 to give me $750, and then I'm going to close out the whole thing by $750. Okay. Is this clear? Does it make sense?
Yes.
Okay. Now, of course, for small businesses, not only will you have a petty cash drawer, a more common example will be a cash register, right? A cash register is something that is similar, right? It's the same thing, same idea. You have a lock box. You need to put cash in there so then when your customers come in and purchase an item from you, you need to have exact change or be able to supply them with the exact change, right? So here is an example that we will use in this class, which is a cash register. However, the steps to doing the cash register is slightly different than it is for establishing a petty cash drawer. But this is the best example that I think would make sense to you, right? Because all businesses need a cash register, more or less, right? There's no such thing as a company that's purely based on check, right? Or credit card, right? Oftentimes they will accept cash. So you need to be able to provide your customers with change. Okay, so again, the two characteristics of a petty cash drawer is what they have in common, right? Number one is having a physical lockbox, which is a cash register itself that usually normally is locked unless you have that button or a key to unlock it, of course. And of course, you have to create a ledger account. So there's a similarity right there. Okay. Now, for keeping track of the cash sales, right, you are going to be finding some kind of method to keep track of all cash receipts, and again, you're going to be exchanging money for those customers. So once again, in order for you to keep track of the money that goes in and out of the cash register, would technically be the sales receipts. Okay. Now, again, you can treat a cash register like a petty cash fund because, once again, how do we treat it? The way that you establish the cash register and how you increase and decrease it is exactly the same, as well as closing out the cash register. The only difference is you don't ever need to replenish the cash register, right? Because the cash register, right, what you're essentially doing is you're just exchanging money for money. And instead of spending the money that's in the cash register, you're actually receiving money from the cash register. Okay? So that's the only difference there. However, it's exactly treated exactly like a petty cash drawer. Okay? Except in this case, right, this is a cash register. So first you need to establish, okay, with your profit manager or your sales representative, you need to talk to them to find out how much cash should be in the cash register at all times. So it could be broken down into how many dollar bills should I have versus how many quarters I should have, or maybe even so for how much smaller bills I need to have versus larger bills. Okay, how many coins I need to have versus other coins. So again, there's a lot of details when it comes into establishing a cash register. Okay, and usually you would go ahead and figure that amount out, and you would go ahead and journalize that you're going to be having cash in the cash register, and of course, it's coming out from your checking account. Okay, so now once again, once you establish it, you're going to, once you journalized it, you're going to post it to your ledger. So you know at all times that when you establish the cash in the register, you're going to start off the register with $500. That means if you're a store clerk, they always have you. The first thing before when you open up the cash register is count all the money that's in the cash register. Okay? So this is how we replenish the petty cash fund. You don't, because in this sense, right, we do not take the money out from the cash register and that's it. No, we put money into it and we take the change that comes after of completing the sale. So again, you never have to replenish the cash register. However, right, the best way to do it is you're going to count the money in the cash register in the first place before opening up your store for sales. You're going to also then, at the end of the day, you're going to count the number of cash sales receipts, okay? Remember, that's separate from your credit card sales, okay? So that's definitely different, okay? This is only sales receipts, okay? Once you counted that, you're going to count the cash that's still in the register, and what you're going to do is you're going to compare, right? Does the number of your receipts match the total number of what you put into the cash register, right? So you're going to obviously subtract how much money you started out with the company or started out in the beginning before you had your sales. And then from there, you're going to compare, Did I have the exact change from my cash sales versus yeah, are they the same from the money that's in the cash register to compared to the total number of receipts? Okay? And that is it. So therefore, you don't need a journal to do this. Okay? You don't need to replenish the petty cash fund for any reason except for exchanging to smaller bills. But at the end of the day, it's going to be the same amount that you originally established your cash register for. So if I had $500, therefore the next day I need to start out with another $500 at all times. And whatever money that's extra, it's going to go straight to the bank account. Okay? And let's say your sales are progressing and you notice that sometimes you have to make those emergency runs out to go get some extra change for the company, right? So that's what a petty cash drawer can do as well, is provide that extra means to, change larger bills into smaller bills. Okay, so you can provide the exact change to your customers. So if that's the case, then here is what's going to happen is that if you're running out of money, you're going to do the same thing exactly like to petty cash, except instead of debiting the petty cash drawer, I'm going to be debiting the cash in the register to represent that I need more cash in my register. And of course, you're going to be taking that out of your checking account. Okay. And then of course, you're going to add that to there. So 500 plus 250 gives you $750 in your cash register. Okay. Now, for any reason you decide that you no longer need a cash register, maybe you're going with the times now and saying, hey, I'm strictly credit card only, or whatever means that you are trying to still collect money, right? Or you just no longer need a cash register and you need to close out the accounts. This is exactly what you do. So exactly the same thing like a petty cash, except this time we're going to take all the money in the cash register and we're going to dump it into our checking account. Straightforward. Okay? And of course, same idea here. We're going to journalize that and then post it to the ledger, which in this case, right, I started out with 500. I increased my cash in the cash register by $250. And then I subtract out the $750 to get me to 0. And that's going to zero out and your cash register. Okay? Any questions?
No.
Okay. Cash shortage and cash overage. Okay? Now, here is where if you have someone who's in charge of the petty cash drawer or the cash register, whoever it is, right? Oftentimes, what happens is that because of either lack of, lack of recording a transaction will cause the petty cash drawer to either have a cash overage or a cash shortage. So here's a great example. So again, you can also, like for example, right, a cash register. If someone says, if a customer comes in and says, oh, hey, you can keep the change, right? And you decided not to put that money in somewhere else. Okay, another way that they do is they have a tip jar and they put it in there. They say keep the change. Okay, so that's often why a cash register would have a cash overage, is because the customer doesn't want their change, so they let you keep it. So therefore, when you count up the cash at the end of the day, it's not going to match up because you have now too much money because you never gave back that money. All right? And then another example too, because since the owner owns everything in the store, the owner can just walk up to the cash register and take $20 and not say a thing. All right? And that will cause the cash register or the petty cash drawer to be in shortage. So again, there's a lot of contributing factors to why the petty cash drawer or a cash register would have a shortage or overage. And those are just a couple of examples that can happen. And it does happen. And that's why accounting is so important, because we need to make sure that wherever our money goes and wherever our money, whether it's flowing in or flowing out, we need to make sure where each and every single penny is. Now, again, there are some also ways where sometimes you might drop change, or you might lose a couple cents by accidentally trying to give it to the customer, right? You might accidentally drop it into the crevices of the desk, right? Therefore, you're not going to dig out for that penny. You're going to just write it off as a loss, or it's going to be forever gone. Okay, so at the end of the day, like, there are many other reasons why that you could end up with a cash shortage or overage, and that usually comes in when you count the number of receipts and your cash in the register, the petty cash, do not equal. Okay, so let's take a look at an example of a cash shortage. So what do you actually normally do when you have a cash shortage? So this example here, on June 1st, we established the petty cash drawer to be a total of $600. But by the end of June, you need to replenish the petty cash drawer. And this is what happened. You end up counting all the receipts to give you a total of $590. And then in the actual petty cash drawer, there's no extra cash laying around. So therefore, you have a $10 shortage. Now, what happens to that? Well, that's where you're going to journalize your transactions, because at the end of the day, your number must be at 600 at all times. So what you're going to do is you're going to record that you have a cash shortage, okay? And that $10, right, is going to be something that you, at the end of the day, could write off as a loss in the future, okay? But that's not what we're talking about. We're just talking about replenishing it, right? So in this case, right, I'm short by $10. Maybe what happens, maybe the owner took $10 from the petty cash drawer. We don't know. What your responsibility here is, once you figure out that you have a cash shortage, you do need to investigate where that money went. Okay, because you can't just write it off just because you feel like it, or you can't find that $10. You do need to do the business some justice and figure out what happened to those $10. Maybe somebody didn't return with their receipt and kept the change. Okay, a lot of things can happen. So what's going to happen is, once you figure that number out, then you're going to replenish the petty cash drawer again with a checking account with the full $600. So once again, your petty cash drawer, whatever you establish it, it must hold that account balance at all times. Okay. Now let's take a look at an example of a cash overage. So here, again, the same scenario where June 1st you established the petty cash drawer to be $600. And then you found that on June 30th, you counted up a total receipts of $600. And then, of course, you also found $20 in the petty cash drawer. Now, again, $600 worth of receipts plus $20 remaining means you have a cash overage. You have way too much money, or way extra money. Maybe the owner decided to be like, oh, I forgot, I need to put money back into the petty cash drawer, and just throws it in there. Anything can happen. Or someone, maybe if someone remembered something, I forgot to put this, or they just put chump change in there, right? Especially with the owner, right? Oh, I have some loose change, I'm going to throw it into the petty cash drawer. Again, it's not a donation, but that can happen. It's possible, right? Oh, I have some extra money, maybe the business might need it. So they just throw it into the petty cash drawer and no one knows about it. So that could be a possibility. So again, if you have this cash overage, you're just going to recognize that you have $20 cash overage, and then you're going to recognize and write a check for the equal amount of $600. So since I have $20 over, that's $20 extra in the petty cash drawer already. So I just need to make it so then I write my check out to be the total amount to equal up 600. So in this case, $580 will give you a total in the petty cash drawer to be 600. Okay. So again, good example would be if a customer says keep the change and you don't take it out of the register, you just leave it in there. Okay. Any questions in regards to chapter 9? This is what we did. So we talked about petty cash and what it's meant to do. So again, I taught you how to establish a petty cash fund, how to increase. Again, increase and decrease are more or less the same aspect, except in reverse. And then last but not least, here we have to close out the petty cash drawer. And then of course, when we are replenishing it, we're going to be counting the total number of receipts and acknowledging that these expenses have occurred, and then writing a check for this exact amount of that, and then putting that amount into the petty cash drawer. Okay? Any questions in regards to chapter 9?
No.
Okay, let's go ahead and dive right into the chapter 9 exercises. All right. So, chapter 9, petty cash exercises. Okay. So, assume that questions 1 through 3 are related. Okay. So, number 1, on January 10th, you decided to establish a petty cash fund for a total amount of $250. Journalize this. So how do I journalize the establishment of a petty cash fund?
Petty cash.
Petty cash, good.
I'm checking. Cash checking. I don't know what.
Uh-huh.
Checking up.
Yep, checking, good. Okay, because you have to write a check to it too, or you're taking money from your checking account in order to put the money into the petty cash drawer. And how much are we going to do it for?
250 debit and checking 250
Good.
credit.
All right. And you can even make a note here that you are doing this, right, to establish petty cash fund. Okay. Number 2, then on January 12th, okay, you took $20 from the petty cash fund, okay, to pay for party supplies, okay. That cost you a total of $18.57. Journalize this transaction.
Party supplies and petty cash, no?
No, you never touched the petty
checking.
cash.
No.
No, you never touched the petty cash drawer.
No.
So in this case, how am I going to journalize this?
Would it be party supplies?
And
Checking?
no.
No, okay. I don't know.
Okay. When do you recognize expenses? When do you recognize that the expense has occurred?
When you count the petty cash, no? When you on the ledger.
What do we call that? When you count out all the receipts and you need to put money back in? Not the ledger.
No.
When we replenish the petty cash fund, right? In this case, did I ask you to replenish the petty cash fund?
No.
No. All I'm telling you is that you took money from the petty cash fund to use to buy party supplies. So in this case, no entry is required because you don't recognize it until you
close the petty cash and you track you count all of the receipts. So then you have to journalize every single transaction, right?
correct.
Okay.
Correct. In this case, while I'm using the petty cash fund, I do not write anything here. Okay. Okay, so now number 3 says that on January 31st, okay, you counted a total receipts in the amount of $179.65 and a total remaining cash of $70.35, okay? Replenish the petty cash fund. Now, it says I need to replenish the petty cash fund. Okay, so right now, if I have a lockbox that has $179 worth of receipts and only $70 left in cash, can I use that for the next month?
No.
Not really. $70 is pretty short, so you definitely need to put more money back in there. And how do I do that?
Do we put in the line item for the 179.65
Mm-hmm.
to replenish it,
Mm-hmm.
and then we do the checking for the 70.35?
No.
No.
That one, how is okay? So that right there, your debits do not match your credits.
Okay.
So in this case, right, I have $70.35 left in my petty cash drawer. How much do I need to keep my petty cash drawer the same? My goal is to make sure that my petty cash drawer amount does not change.
109 and something.
179.
179.65. That's what you're supposed to have total.
Good. That's how much I need to put cash back. So in this case, right, it is January 31st, right? In this case, I'm going to have you say these are cash receipts expense, right? Because I didn't give you a list of the expenses. Since Nancy said that you're going to recognize this line item, right? So, of course, you're going to list out every single expense that occurred. But in this case, I didn't give you that. So, 179.65. And here, in order to keep my petty cash drawer at $250, I need to put that money back in there for the same exact amount, right? What is 179.65 plus $70.35?
250.
250. Okay. So that's what I got to do. I have to write the check for the amount because right now I only have $70.35. I need my petty cash drawer to have a total of $250. Okay. And then, of course, I'm going to go ahead and make a note here to replenish petty cash fund. Okay. Is this one getting more clear?
Nope. Can you explain again?
Okay. So, right in the very beginning, I started out with my petty cash drawer at $250, right? Okay. As I'm spending the money through the month, right? At the end of the month, I realized that I spent a total of $179.65 worth of receipts, right? I've spent all that money and I only have $70.53 left. Now, in order for me to prepare for the next month of expenses, I need to have my petty cash drawer be a total of $250 worth of cash. So then I can make my expenses for the following month. Now, in this case, how do I convert all of these receipts in order to make my cash amount be equal to $250? Because right now I only have $70.35.
Yes, yeah. For to replace the money, you're supposed to so you only have $70. You need the 179 to have the the balance, your balance on the petty cash. That's the reason, right?
Yes.
Okay.
Yes. So if you think of it this way, easier way of understanding is, so you spend a bunch of money, right? So that means your lockbox right now has a bunch of receipts and some leftover cash. What I'm going to take is I'm going to take those receipts, and what I'm going to do is I'm going to exchange them and convert them back into cash. And how do I do that? I take each receipt, look at what that expense is, and record it, and slowly, one by one, calculate all of my expenses, and then convert that by writing a check to cover all of those expenses. Make sense? So basically, I'm taking those vouchers and I'm converting them into cash. So then I have more money to spend for the next month. And the whole goal of a petty cash drawer is that its account balance must always stay whatever you establish it, right? If I establish at $250, it must stay $250 all the way until you close it. Okay? So in this case, right, if I have a lockbox of $179 worth of cash of receipts and I have $70 remaining in cash, how do I take that $179 and convert it into cash? How do I make my lockbox be back to $250?
Paying the receipt. No?
Exactly. Right? Take those receipts, and you said pay the receipts. Okay, in this case, yes. If that's a better way of understanding it, you're taking those receipts and you're cashing them out. Okay. All right. Any questions so far?
No.
Okay. All right. Assume that questions 4 through 6 are not related to the previous questions. Okay, so a completely new, different scenario. Okay. On February 1st, okay, you needed to establish your cash register to be a total of $500. So how do you establish your cash register?
The cash and register and our checking.
Good, right? We need to put the cash in the register. Right? So we can start our sales for the day. And we're going to do checking. Okay? For $500. So that means with this example here, you need to have $500 in your register at all times, right? That's the core thing about business, is that you always need to make sure that you have this exact number in your checking account or in your cash register at all times, okay? And of course, you can put a note here that you are to establish cash in register. Okay. Then on February 15th, okay, at the end of the day, okay, you counted the total of $156 of cash receipts and a total of $656 cash in the cash register. Replenish the cash register.
Would this also be like the petty cash where we don't make an entry for it?
Yes. You don't need to make an entry, but think about it. Are we actually taking money away from the register?
No.
No. So therefore, no entry is necessary. Okay? Because in this case, this is when you do the accounting at the end, right? Does your total receipts, cash receipts, match the beginning of your cash plus the whatever extra money that you made? In this case, yes, it does.
Yes.
Mm-hmm. So then on February 28th, you decided to switch to a credit card. You started to switch from a cash register to a credit card only. Okay, so in this case, I need to journalize the closing of the cash register. So how do I close out my cash register?
We would need the line for the checking and then a line for the cash in the register.
Yes, right, because in this case, I don't need the cash register anymore, so I need to close it out. So in this case, I established it at 500. So this is what I'm gonna do. I'm gonna take that $500 from the cash and I'm gonna dump it into my checking account. Good. To close out cash in register. Okay. Is everyone okay with this?
Yes.
Okay.
Yes.
Last two questions, okay? Question number 7. If you had established a petty cash fund for $200, right? At the end of the month, you calculated the total of receipts to be $155.20 and a total cash of $50, okay? You have a blank in the petty cash fund.
Over.
You have an overage?
Yes.
Shortage.
$5. It is $200. You have 155, and you have a $50.
Good. Overage.
Alright.
Right? In this case, that's exactly right. You have $155. Wait.
You're supposed to have $45, no?
You're supposed to have $200. Okay?
$200. Okay.
But in this case, you had the expenses to be 155, and of course, you have $50 remaining. So in this case, you do have an overage.
Yeah.
Because your total cash, your total expenses, or your total amount that you have now is $205.20 when it's supposed to be just 200. Okay. So if you have established a petty cash fund for $200 and at the end of the month, you calculated a total receipts of $150.54 and a total cash of $24.46. Therefore, you have a blank in the petty cash fund. Shortage, yes. This one is a clear one because if you add 150 plus $24, you're probably going to get about 175. So where did the other $25 go? So in this case, you do have a shortage. Okay. Good. All right. Again, we do have a chapter 9 and 10 review for this. So if this is not very clear yet, it's okay because oftentimes we don't necessarily need a petty cash drawer for any reason. But once again, it's just a lesson that we should learn because you can have a petty cash. But always, most likely, a lot of businesses will have a cash register. So you do need to know how a cash register works. Okay? So any questions?